Let's start off with what are individual investors, what are they looking for? When they go on your site and other sites, what are they searching for?
Yeah, we like to look at what our visitors are searching for. We look at it over a course of time, over the last several weeks. Here's what came to the top of the list. What is a doom loop? And that is not a rap beat by Cypress Hill. A doom loop is that negative economic cycle, and people have been talking about that with what's happening in downtowns across America in terms of those vacancies. Also, how to invest in AI.
Second one, yeah, that
of course,
makes sense.
Fear to the left, greed to the right. We're stuck in the middle with people looking for opportunities, but also worried about their money. Where's the best place to find a high-yield savings account? What's the best money market account? A lot of that still, because you're getting good rates there. But student loan debt was also on people's minds. People want to know who owns it and how much is actually owed, and also how to minimize taxes on 401k withdrawals. This surprised me that people are actually thinking about potentially tapping their 401ks.
Yeah, it's not a good sign when two of the questions are about debt and withdrawing from your 401k. In June, we saw the market basically broaden out. I want to kind of touch on some of the data that you're getting right now when it comes to what funds that investors are looking at. So top three are the VOO, basically the S&P 500, the RSP, the equal-weighted S&P 500, and then the SPY. We all know what that is. What does it tell us about the market in the second half that so many people are looking for an index that invests in the broader market?
Yeah, it's size kind of rules everything around here. So VOO, one of the biggest ETFs out there, that is the whole stock market. But then you have people also searching and putting money into the equal weight S&P because they're worried about that concentration of the Magnificent Seven, or whatever we're calling them these days, carrying too much of the market's load. So people are both putting money into the big SPYs, the big VOOs, but also looking for the equal weight, but also looking for opportunities in the Qs that have been really strong pretty much for the last 6 months.
Yeah, but your top three are basically the S&P. I think that's interesting. When people are really interested in mega cap tech and AI, but they want to put their money more actively into the broader market.
Yeah, people want to get a little promiscuous, but they still gravitate to where size is because they want to be with everybody else. That's herd mentality, and we've seen it pretty much since this rally began in October. They want to go to where the safety and the most investors are putting their money these days.
All right, fascinating data that you have here. One of the things I saw were fund flows. We made a chart here looking at it month to month. What does that tell you? What does that tell you about individual investors?
Yeah, I think it's a push and pull. You saw a lot of aggressive fund flows, maybe sort of in the end of last year and the beginning of this year, pulling back a little bit. So if you look at mutual fund flows and ETF fund flows, they're kind of meh, which kind of tells you this market's been grinding higher slowly. This hasn't been a big surge. It's just been a slow tick higher because people are both institutions and individuals not quite sure if they want to commit yet. That lack of conviction, Frank, that might be holding us back from higher highs.
All right, so lack of conviction or anxiety, which one would you say it is?
I'd say a little bit of both. And the anxiety is concentrated when we look at what our users are searching for in our anxiety index. They're anxious about their own money. They're anxious about, their money in the bank. They're anxious about whether they're going to be protected if we go into a recession. So there's anxiety about personal finance, but a little less anxiety about the market, which is kind of why you got that wishy-washiness in those fund flows.